Yeah, certainly. We think the US market can actually make new highs over the next 12 months. Part of that is predicated on the earnings story. We still think the earnings picture for the US corporate is very strong. Remember, they've still got a huge amount of share buybacks that lend support to share prices too. And also it's that broader economic backdrop. When we look at equities relative to other asset classes, they're still very attractive. You know, we can see obviously the headline price earnings ratio looks high relative to its own history, but only looking at that to us really misses the bigger picture of returns you can get elsewhere. So US equities to us, we can see around a 10% upside over a 12-month view, driven by that balance of the higher growth sectors that I mentioned before, technology, healthcare, but also with other sectors, that market rally broadening out. So industrials, construction, materials, also sectors that we're positive on in the US.
Oh, Grace, we started out the show debating what's better for markets, a Republican or a Democrat win this time of the US election. But based on what you're telling us, short term, it doesn't really matter who's in the White House.
I think that when we talk about the US election, it depends on your time frame, the lens that you use. If you're looking over a shorter time frame, let's say less than 6 months, then it's often quite helpful to look back in history. And we've done that analysis, the last 22 odd elections going all the way back to the 1930s. And that's helpful to do because it gives you an indication of market psychology. And what you tend to see is that markets in an election year start off quite well, that then you see a stalling into the election itself, and then a recovery thereafter. So far this year, we've seen that playbook roughly followed. Obviously, we've had quite an exceptional year with COVID as well. But over the longer term, then the outcome of the election is unlikely to materially drive share prices. It's the earnings picture that really drives shares. So a lot of our work is done focusing on the parts of the market where we can see this longer term, more visible growth, or indeed, as we talk about the more cyclical recovery, parts of the market that's backed by fiscal spending and flows, because flows obviously make a huge difference to equity appreciation. So seeking parts of the market which we think ESG features quite highly when you look at the flows picture, particularly for the European side of the equity markets, is where we spend a lot of time figuring things out.